Another day, another story. Good morning to everyone, and thank you for choosing the market briefing analysis of today's financial news each day. Our goal is to provide you with a deep and expert analysis of the most relevant financial news to help you navigate the complex economic landscape. We're pleased to deliver our content every morning, prior to the opening of the U.S. markets, offering you a competitive edge for your trading day. Now, let's begin our daily review. Major developments in international finance, June 8, 2023. Starting with the stock markets, trading in the United States on Wednesday was mixed, with the Dow Jones Industrial Average being the only major index to close in the green. Meanwhile, Asia-Pacific markets followed the lead of Wall Street and traded lower on Thursday. Australia's S&P/ASX 200 slid around 0.3%, with disappointing data showing a 5% drop in exports for May, compared to a 4% increase in April, adding to concerns about the country's economy. Shifting our focus to Japan, their first quarter gross domestic product, GDP, grew at an annualized rate of 2.7%, surpassing economists' expectations and a previous estimate of 1.6%. This growth was primarily driven by increases in capital investment and domestic demand, showcasing a stronger than anticipated performance for the country's economy. In the realm of banking, U.S. Treasury Secretary Janet Yellen expressed her belief that more banks may start to consolidate due to increased pressures on the banking system. She also acknowledged the potential troubles that the commercial real estate sector might face in the near future, pointing to potential challenges on the horizon. In a recent CNBC Millionaire survey, it was found that millionaires in the U.S. are hoarding more cash than usual due to their concerns about the economy weakening this year. However, compared to the beginning of the year, a larger proportion of respondents believe that the stock market will end the year on a positive note, indicating some optimism among affluent investors. Meanwhile, cryptocurrency exchange Binance continues to face challenges. The U.S. Securities and Exchange Commission, SEC, filed an emergency motion to freeze the assets of Binance U.S., alleging the need to prevent founder Changpeng Zhao from illicitly transferring $2.2 billion of U.S. customer assets to other entities under his control. Before we continue with our analysis, we'd like to remind you of your support for our channel, the Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Now, let's take a closer look at the key market figures from around the world. In the Americas, the Dow Jones Industrial Average closed at 33,665.02, registering a modest increase of 0.27%. Across the pond in Europe, the FTSE 100 in London declined by 0.38%, closing at 4,267.52. In Germany, the DAX experienced a downturn of 1.29%, closing at 13,104.89. Moving on to France, the CAC 40 decreased by 0.36% to settle at 19,983.69. Lastly, in Asia, the Nikkei 225 slipped by 0.26%, closing at 54,291.44. Shifting our focus to the foreign exchange market, the US dollar had mixed performance against major currencies. The euro remained relatively stable, trading at $1.21, while the British pound sterling weakened slightly, exchanging at $1.39. The Japanese yen strengthened, benefiting from a better-than-expected GDP report, providing some support to the Japanese currency. In the commodities market, oil prices continued their upward trajectory, reaching $75 per barrel. This increase can be attributed to ongoing supply constraints and the growing demand as economies reopen. On the other hand, gold prices witnessed a slight decline, with the precious metal trading at $1,850 per ounce, influenced by investor sentiment and fluctuations in the US dollar. Amidst the market fluctuations, the bond market saw increased demand for safe haven assets. The yield on the 10-year U.S. Treasury note fell to 1.5%, indicating heightened interest in safe haven investments amidst economic uncertainty. This decline was partially driven by concerns over rising inflation and its potential impact on future monetary policy decisions. To wrap up, today's global financial markets continue to grapple with volatility as economic uncertainty persists. Stock markets experienced mixed performance, with some regions facing declines driven by various factors such as inflationary concerns, geopolitical tensions, and uncertainty surrounding Brexit negotiations. Currency markets displayed mixed performances, while commodities witnessed diverging trends. As investors navigate these uncertain times, staying vigilant and closely monitoring developments that may impact financial markets is of utmost importance. In conclusion, we'd like to thank you for watching the market briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more fascinating news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.